FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
Today's show is brought to you by Blue Sky Uranium Corporation. Blue Sky has first mover advantage in Argentina in the world's newest uranium and vanadium district. With an existing near-surface deposit that's open for expansion, Blue Sky also controls a massive district-scale land package with mineralization along a 145-kilometer-long trend. Blue Sky possesses tremendous exploration upside and is an excellent leverage play on rising uranium and vanadium prices. The company is run by a best-in-class management and technical team with proven exploration and development success in Argentina. Blue Sky Uranium trades under the ticker symbol BSK on the Toronto Venture Exchange and as BKUCF on the OTC. For more information and to stay on top of the latest news, go to blueskyuranium.com. That's blueskyuranium.com.
The Financial Survival Network. It's all about what's next.
Welcome. You are listening to the Financial Survival Network. I am Kerry Lutz. It's 4/23/19. There's a lot of different ways to look at the world. We know it. Left, right, top, bottom, center, all of those things. And that applies doubly for investing, for building wealth. And really the definition of investing is a process utilized or undergone to help build wealth through investing. I hate using the word to define the word because, that's what the dictionaries all do. But you're going to find out about fearless wealth very shortly. Hey, as always, we invite you to be a part of the show and write us, email us, kl@kerrylutz.com. Well, fearless wealth. Person you're about to hear from has devoted his life to fearless wealth, and you can find his work over at fearlesswealth.com. I'm talking about RC Peck. RC, you got this site, Fearless Wealth. You're all about looking at things differently, square peg, round hole, etc. What is fearless wealth?
Fearless wealth is my take on really increasing your units of wealth in your life. And one of the first things I noticed when I started investing was I was bouncing between 2 types of scaredness. Adults don't use the word scaredness, but they probably should. 2 types of fear. One fear was I did not want to lose money, right? I did not want to lose money. And that would motivate me to do certain things, which may or may not be good for me. But then I got pushed to a different type of fear. And it was the fear of the parade going by without me. Oh, I've got to get in. I've got to get into the parade.
Right? Fear of missing out.
It's become an acronym now and it gets thrown around. But the problem with acronyms and jargon is people start to use them and they actually forget the experience of them. But yeah. It's the fear of having something happen without, you being part of it. But I noticed it wasn't greed. I didn't find greed from individual investors when they made a mistake, right? What I found was, I was so worried. I was so scared. I was like, gosh, this core emotion, this core feeling is at the center of most investing. And because I'm dyslexic, I don't think in words or sentences or paragraphs. I think in images. And so early on, I started looking at investment problems by looking at price charts because my brain can make sense of, it's going up and to the right. That's probably safer than down and to the right. So it kind of started with me solving my own problem, which was I wanted to figure it out. Reading was exceptionally difficult for me. And I kind of came across price charts and started really doing a deep dive into the feelings, the behavior, the psychology, the emotion of investing back in the 90s.
Right. So if I could paraphrase it, winning isn't the main thing. Winning is the only thing. Making money isn't the main thing. It's the only thing that we care about with investing. So you're a bit dyslexic, so you had to what people with so-called learning disabilities have to do is develop different ways to download information, and you need to come up with different coping skills because the way that the so-called normal population functions really is standardized. But for people outside the box, right? Outside the norm, outside the envelope, you have to kind of do this on your own, whether you have ADHD or any other number of different wiring, I guess, for your brain. So you got to come up with different ways to make things work and to function in the world, which obviously you have done. So that must have been a real struggle.
I mean, yes, it was. I mean, I probably graduated high school at the fourth grade reading level, and yet I graduated with like a 3.3 out of a 4, simply because they took every art class in my high school. And then my art teachers would make up art classes for me. And I figured early on that an A in art was worth 4 points and an A in English was worth 4 points. So unless someone wanted to know how I made all my A's, they would just see the net result of, oh, he's like a B+ person. But honestly, I was probably a C person with a, triple A+ art brain.
But one thing that people with these types of, I hesitate to call them afflictions, I call it a challenge, because really who you are, really everything about you sprang from dyslexia, is that you have to have a really good memory and you have to look for connections in order to fortify your memory and to be able to work in society at large, right?
Yeah, and it's a yes and I didn't know I had dyslexia, right? I just knew like I'm not dumb, but why do I sometimes feel dumb? But I'm not dumb, but why do I something's wrong here? And I kind of I empathize with the investor, because you have an investor who's like, but I'm not dumb. I earn well. I'm smart. But what's going on? But I'm not dumb. But wait, how come this isn't working? So I'm able to step kind of on that person's map and go, I get it. You weren't maybe shown the best map of the territory, or you weren't given the right compass or your compass that helps you. And so I think just being able to understand how someone who earns well and has done everything the right way and got the right degrees can still go, something's off. Why isn't my wealth better or bigger? Because I'm working my butt off. Something's wrong.
Mm-hmm. So, there's something off. You don't know what it is, and they haven't figured out what it is. Your teachers, the administrators, all the people in school, they don't know, because they just cater to the middle, not the high, not the low, and not anyone who's off the charts. So obviously at some point here, RC, you had an epiphany. How did that happen?
It probably happened it was in my 20s. My first job out of college was selling medical software in Asia. I earned well, came home and said, I'm going to figure out investing. My two loves in my late teens and early 20s was Asia and investing. So I come home and I start doing a deep dive into investing, and I approach literally anyone who will listen to me. I go on Wall Street, I go on the pits in the Twin Towers when they were there. And I would literally say, look, I'll pay you to teach me. Mm-hmm. And someone would be like, look, you need to have an annuity. You got to have an annuity, RC. I'm like, all right, well, how much should I put in? Give me $5,000 a year for the next 40 years, and you're going to have this much. And the first thing my brain went was like, how do I know that's best for me? And my brain was like, I need to see a picture of it. I need to, okay, that's a big number, but is that what's best? And I was kind of Tom Hanks from the movie Big. It didn't make sense. Well, okay, but how do I know that works? And they kept showing me words, and I kept going, well, show me an image, or show me. And I knew what the S&P could do over 20 or 30 or 40 years with 5,000. And so I kept asking, and I wasn't doing it to annoy them or anger them, but I just started noticing, well, wait a second, if the Priceline's not going higher and the words say it should, which one should I believe, right? If a company beats their earnings and their earnings per share is up and their net income is up and everyone's high-fiving and the price continues to fall, okay, but which one should I believe? And I was just like, I'm going to believe the price because that's the way my account gets bigger. And I came at it just naive because I didn't grow up in the industry. I just wanted to know what really worked. And I was like, oh, well, price seems to matter more than, oh, that company, they missed their earnings. They really missed their earnings and their stock went up and their stock hit a new lifetime high. Wait a second, should I just continue looking at pictures? And so what I found was this was a very, very, very unpopular point of view when I would talk to, and I am an advisor, but when I talk to advisors and money managers, they'd be like, yeah, that doesn't make sense. Or they would, poo-poo it. And I'm like, I don't know. I think there might be something here. And so it gave me a level of clarity, right? It was almost like, oh my gosh, I have dyslexia. This is why I had those feelings. This is how to see it clearly. But using that metaphorically with investing, oh, I understand now with investing, price matters most. Focus on price, not words.
Mm-hmm. So it's all about price. And for somebody like you, that was something you could really focus on.
And it seemed real. Like no one's ever re-reported their price. Sorry, guys, 8 months later, the price 8 months ago that we missed price. No, it's history. You don't change price. You don't adjust price. Like that's what the price is. You may not believe it or want it to be that, but no one restates price. And I was like, wow, okay, that has some legitimacy.
Mm-hmm. Yep, I can see that. So now fast forward to 2019. Here you are. You've been teaching people a system that you've developed. How does that work?
Well, I mean, the investing part is the easiest. The behavioral part is the hardest. And most people look at the behavioral part last. I know it's more popular today, but when I started this 2 decades ago, it was really looked down upon. So one of the first things I do with all people is I have them connect to their money. I don't ask them what they're spending on lattes. I simply say, do you actually know how to connect with your money? Do you know how to listen to your money? Like your money is trying to tell you something. Did you know that? And so one of the very first things I do is I have them connect to it. And I do it by getting them very just really clear about, great, what's your net wealth? What are the 4 parts that make up your net wealth? Let's look at the actual numbers, right? So when you lift the hood on your net wealth, there's only 4 parts to the engine. You don't need to go to school for 4 years. You go, these are my 4 parts. Is any one of them not working, meaning falling? So I have them connect to it in a very black and white way. And the neat thing about money or wealth, unlike health or relationships, is it's really agnostic. It doesn't give you high fives or accolades for effort or bonus. It literally just looks at the bottom number. And it's one of the only things that you literally can give to your kids and your grandkids and your great-grandkids and your great-great-great-great. Like you can't give them your health necessarily, and you can't give them your great relationships, but it's something that you can actually give to others. And it's such an amazing teacher because if you understand how to connect to your money and you know how to listen to it, then the filter you've built, like you know how to filter out the noise. And we all know the noise is incredibly loud today. So to answer your question, it's really just understanding how to connect to your money properly so you can listen to it.
So connect with your money to listen to it. And so when people work with you, how do you do this?
Yeah. So what's interesting about that is most people have actually never been trained on their net wealth, right? You may go to Stanford. Stanford's really about finding a job. That's about earning money. Reading books is information important, but it's intellectual knowledge and not experiential knowledge. So one of the first things I want them to do is to have it be an experience of being trained. Like you're going to get trained just like the, astronauts going to the moon. It was about training. It wasn't about books. So I get them trained by literally almost forcing them to write down what their trades have been. For example, someone comes into my world and they're like, I want to be a better trader. Okay, let me see the last year of your trades. If they've done a lot, let's call it 120 trades. So they'll balk at this. They're like, I don't have time I need to get better at this. Like, so right away, I know something's wrong. But when they actually do take the coaching and they do the 120 trades and they look at them, that alone starts giving them huge insight. I then look at it and go, oh, did you realize out of your 120 trades, 109 of them had you losing money? Did you realize 12% of them you were in and out in the same day? And they're like, no, I wasn't. I'm like, I'm looking at the trade dates. So a lot of people don't even know what's actually happening. They're doing what they think is happening. And so getting them to force is maybe not the right word, but force them to connect to what is actually happening and show it to them in a clear way. It literally starts reshaping and rewiring their brain to like, oh my gosh, I've kind of been out of control. And so I go through that interaction where they have to connect with their money. And so they start learning like, oh, wow, okay, I've been abusing my money. Mm. It's not the economy.
Yeah. So you got some success stories you can share with us?
I mean, I have lots of them. I mean, the thing I'm probably most proud of is that this training does transform people's lives. So one of the things that I hear most about is, or the people who probably come into my world the most are those who have figured out the earnings part, but not the keeping it and growing it part. And they don't want to keep getting rich over and over. And so one success story was actually with a guy, and guys are harder to train than women, than gals.
Why is that?
They're more resistant to almost everything.
Yeah, really?
Huh. Yeah, I know.
I'm not surprised.
I mean, I'm 48. I'm 48 this year, but I started this when I was 28. So people would hire me who were 10, 20 years older than me and had a lot more money. And I'd have to confront them and be like, yeah, I think you're lying to me. And, no one probably told the 58-year-old CEO that he's lying. But what I found was when they stopped defending, and the guy's like, look, when I noticed when I stopped defending and I started actually looking at it, what he noticed was this specific guy used to live in Silicon Valley. He said, I didn't realize how loud the noise was blaring in my ear. I didn't realize the level of angst and overwhelm and stress. And once you kind of forced me, because in a way, I didn't care if he liked me. And I say that to my training clients, your job is not to be like, oh, I like RC, right? And you shouldn't have to trust me. You should be able to know how to verify what I'm saying. And so what he said, he goes, I didn't always like you. And I always thought I had to trust and like someone who was talking to me about my money because I didn't have the compass or the map. I didn't know what I didn't know. But now that I know how to verify, of course I trust and like you, but I don't have to. And he was actually surprised how much unnecessary effort and pain and busyness and scaredness there actually was. And this is, by the way, an accomplished man in his 40s that runs, a company in Silicon Valley. So even using this type of language was unusual for him. But he's like, not only am I clear now how to keep it and grow it, but but my wife actually notices that I'm a much calmer person than I used to be because the noise has been turned off.
Mm-hmm. I gotcha. So interesting. And so can you just do this with anyone, or are some people just impossible to educate?
Yeah, some people are absolutely impossible to educate. Some will say they want to be trained. They may use those words, but they don't actually want to, right? They want to keep going to the weekend workshops and they want to keep reading the books and they learn the terms and the jargon, but it gets down to actually shifting the way they behave. Mm-hmm. It's very different. So what I learned was the more someone pays to get trained, the more likely they will actually change their behavior. Now, you don't need to charge $1 million. So if you did, I know Tony Robbins charges $1 or $2 million with his one-on-one clients. And one of the first things he says to them is, hey, what's your health? What's your weight? Yeah, you need to fix that immediately. Like if you want to work on your business and your marriage and you're 85 pounds overweight, that's not going to work. Well, guess what? You just paid the guy $2 million. So what are you going to do? You're going to lose the 85 pounds. So there's a behavioral part to it that most people aren't willing to make the commitment. And what I've noticed is a general causation between the more somebody makes, generally speaking, if they make over 100 or 200,000, the more likely they are into behaving a different way. But if someone, say, makes 50,000, they're much more defensive on what you're suggesting. Like they'll go in defense, like, I don't have the time, I don't have this. And I'm not diminishing people who make 50. I'm simply noticing that there's a causation with someone, all things being equal. If you gave me two people, Kerry, one makes 50, one makes 250, and they both paid the same dollar amount. Let's just say the dollar amount was $10,000 to get trained.
Right.
Or it's 10,000 for the one and 5,000 for the other. I can tell you the person who makes 250 and spent the 10K, they are committed to changing their behavior, and they're less likely to use defensive language than the person who's making 50. Mm-hmm. And by the way, what I just said to you is incredibly unpopular and will probably trigger a lot of people.
Oh, well, what can you do? So when we look at this whole thing and we look at the mess the economy's in now, what are the key things you need to keep track of to not get burnt?
I think the number one thing is there are blocking and tackling type of behavior that will never break. For example, did you actually transfer some of your net wealth to your future? Right? I didn't use the word save. I used the word transfer to your future. Your future usually means a retirement account. So are you doing that behavior of transferring a number to your future? Most people are not. If those who are, it's like, okay, so you have that part done. The second thing is you may live in the U.S. economy, but you have your own economy. Like, how is your own economy doing? And that economy is made up of really two things. What you're able to generate, let's say you make $85,000 a year, and then what you're able to transfer to your future. Those are key components that they can't be thought around, they can't be IQ'd around, it's a do not pass go thing. You have to transfer money to your future. And then once it's there in those accounts, you have to look at the price, because price knows more than almost everything. Of course it can be wrong, but it's the least wrong of all the measurements of what you're doing, right? So you take the money you've transferred, and you say, okay, I got to get it on a line that's going up and to the right. You can beware of PE ratios and the economy and quantitative easing and trade wars and all these other words, but ultimately your net wealth goes up if it's on that black line that's also going up. I am oversimplifying it a little bit because there, of course, are nuances to it. But what I guess I want you to most hear is that the question can be complicated, right? Like the economy or the stock market. But the answer or the solution can actually be powerfully simple. And many times the powerfully simple answer is the one that breaks least and really can help people the most.
Mm-hmm. I gotcha. All right. So if you're looking to shift your investment philosophy around and to start doing things right and following the line up to the right instead of down to the right, what do you do? How do we contact you?
The easiest way to kind of come into my world or come to my Kool-Aid stand is to go to fearlesswealth.com. That is the place to find me. It's been the place for 20 years and probably will be for another 20. So the next step is the easiest, and that's just to visit that site and get connected.
All right. It sounds really good. Hey, any questions or comments for RC or myself? Email us kl@kerrylutz.com. Make sure you check out our site, financialsurvivalnetwork.com. Sign up for the newsletter, and please subscribe, like, and share, whether you're listening to a podcast or a YouTube video. It really helps us a lot when you do that. It helps us get out ideas like RC's, which are desperately needed. RC, really appreciate you coming on the show. Good luck.
Thanks, man. Thanks so much.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.